I'm Charlotte McLeod with investingnews.com, and here today with me is Yvonne Blaszczyk, President and CEO of BMG Group. Thank you so much for joining me. Great to have you here.
My pleasure. Thank you.
Really good to be speaking with you. We've got a lot to go over today. I thought, though, that we could start with a brief introduction to you and how you got into the precious metals space. I think many people in our audience will probably be familiar with BMG Group through Nick Barishev, who sadly passed away last year, but would love to hear about you and yourself.
So I have been involved with Nick for many, many years. Personally, I have served on the board of directors of BMG for over a decade, including all their subsidiaries. I'm also chief financial officer for our mutual funds, which are backed with gold. I have been in this role since last year, since Nick's passing. And it was a very, very smooth transition because I work very closely with him. And I was very much hands-on involved in all the aspects. So that's really, really great. Personally, I am absolutely focused on geopolitics, economy, and finance. It has been my passion all my life. And it is very interesting right now that there's such a great focus on all that's happening outside, not only domestically, and how it impacts gold, fiat currency, and everything else.
Okay, good to get a little bit of an overview of your background and your interests. So, of course, today we're going to focus on gold. And with the geopolitical angle, where I wanted to start is with the BRICS, because I know you have a strong interest there. So toward the beginning of this year, we saw a number of new countries officially added to the BRICS. And I saw an article the other week that said there's more than 30 countries right now that are interested in joining. So lots going on there. Of course, that has implications for de-dollarization and by extension for gold. So curious to know what you're watching in terms of the BRICS this year, what developments you're looking for.
This is actually very interesting phenomena. BRICS itself started as a alternative kind of a coalition or a bloc for trading on economic, not necessarily political power, but the actors in that organizations are on the opposite spectrum of the Western economies and North American in particular and European. So BRICS influence and the potential for the gold-backed currency is very, very important and I think very critical. There's not enough, I think, attention paid to that. We are so focused on the domestic factors that influence prices of gold or interest rates, elections, those kind of things. We don't really understand what gravitates different countries to join BRICS. You have to really understand the history and a kind of geopolitical and cultural background of many of the countries. Many of the members of BRICS are the emerging economies, and they are basically pushing away from the dependency on US dollar. At the local level, a lot of those countries do not have as an official currency US dollar. However, the trading creates a lot of issues, not only the price of the US dollar, but also the fact there is an underground economy and a lot of other things that damaging those countries per se. Also, the other thing is a issue of fiat currencies. A lot of the BRICS members want to, and some of them already have, back their currency with actually gold, with the precious metals. And that will give them the strength that we don't have in our economy currently. Also, most of those countries have been accelerated recently, most recently last few years, due to the sanctions. The sanctions push everybody into arms of BRICS. The sanctions also, more importantly, are very, very dangerous in terms of a departure from SWIFT. It's an incredible danger for many countries to actually start trading internationally on other systems. As I'm sure you are aware of the fact that in 2014, Russia developed the cross-border interbanking system that right now, actually, right now there is a 550 organizations from 150 foreign countries, so from 60 foreign countries, are using their system. That means they are not using SWIFT, but many of them, they use both. China in 2015 developed also a system called SIPS, also cross-border system, which is a very, very, I think, right now is probably huge competition to SWIFT. China has some of the shareholders of that system are New Zealand Bank, Paribas, French bank, many other banks, including HSBC, and they are trading mostly in Asia, but everywhere else in UN. So that creates a alternative. The alternative that will actually eventually fill the void, which is a political and other kind of areas that are not necessarily directly involved in prices of gold, but that indirectly they will influence push for gold. The BRICS countries are not only geopolitically aligned, but they are a huge economic and political bloc right now. When you go back into history, you know how different blocs and civilizations fell and were, disseminated. This could be a turning point for the financial world and political world as we know right now. The political changes are not visible to everyone. They because they have too many facets. There are too many variables at the same time working that affect at the end of the day the financial systems. BRICS right now is I think, huge competition for the hegemony of US dollar as a reserve currency. There are experts there thinking that perhaps UN is going to be the next reverse currency. There are some experts, analysts think that there be total collapse of US dollar, which I do not think. I think what will happen, the hegemony is going to be kind of diminished, and US dollar will not have such a wide use as right now in international trade. Also, just most recently, a French president Macron was concerned about the level of debt of over $34 trillion US debt, which affects the US dollar. The concern spilled because of the euro in their own economy. There are so many other factors, but those kind of issues were never voiced before. So right now there is an ongoing concern in terms of the U.S. economy, what is happening to U.S. dollar, and BRICS is growing. More and more countries are joining it. I was just looking at the map, at the kind of the global map, and when you think about it, from every continent, from every single continent, except North America, everybody pretty much joined BRICS. Right now, BRICS has almost 46% of the total population of the world, maybe even more if we add all other small countries. They have they have over 40% of the oil production and the oil transportation. They have almost 40% of the global territory with all the natural resources. They have the major players, the founders, which is China, Russia, Brazil. They have incredible potential in terms of changing and affecting the US dollar and of course the prices of gold. Most of those countries that have huge reserves of gold, their central banks are buying gold like there's no tomorrow, and they'll keep on buying. They'll keep on buying for a variety of reasons that I'm going to mention shortly. So BRICS is basically, I think, one of the biggest economic political blocs that is going to become very powerful in our recent history. So that's there is also another bloc is Association of Southeast Asian nations, and a lot of them already stopped using US dollar as a trading currency. They're using Chinese yuan, and maybe they will. A lot of those members are also are joining or joined or would like to join BRICS. So that's very, very concerning. Now, beside the economic cooperation and politics of it, I think none of those countries, except for just small kind of skirmishes and hot flashes politically, are involved in any kind of military major conflict. There is a conflict, of course, between Russia and Ukraine that is ongoing. But the brand of that conflict also is borne by US. The amount of money and by European countries that is being put into that conflict is continuously weakening their economy, which has again impact on US dollar, on euro, but most important has an impact on gold. Gold was always forever and ever safe haven during the time of crisis, during the time of geopolitical conflict, during the time of economic conflict, cataclysms, and gold is money. And countries that have gold will not perish. Gold will never disappear, will never be zero, will never diminish. It's the physicality of it is going to prevent that. Gold fluctuates. And I think there's a misconception because gold fluctuates on daily, weekly basis, but overall, on an annual basis or a period of time, gold is the fabulous place to be. So those countries, the BRICS countries, they think in a very simple terms. If gold was $30 or something in the 60s, right now it's over $2,000. That's incredible growth and incredible safety. And that's the main reason that many of those small countries, the emerging economies, they are poor. They don't have a same infrastructure as we have in the West. They are gravitating towards some alternative that will give them some sort of a future. There are other countries, as you know, like Argentina, that was going to join BRICS, and their new president decided not to. And I wrote in one of my articles, actually, it's probably kind of it was welcomed probably by BRICS countries because Argentina has such a history of economic collapses with a huge debt. And that would not be a sort of a good addition for the emerging countries that trying to move forward in their economy. Argentina is extremely rich in natural resources and gold. They are seeking to basically replace their currency with US dollar, which will be very detrimental, could lead probably to some huge social unrest. But perhaps, they will consider backing it with gold. That would have been a very interesting alternative.
That would be very interesting to see. So we'll keep an eye on that one. And, that was a great overview of what's going on with the BRICS and other factors that are affecting gold. I think there's a couple of points we should go back and pick up on. So you mentioned the central bank buying of gold. We had a record year in 2022, and I believe 2023 also very strong, but not quite beating that record for the central banks. And who is buying in terms of the central banks, I think really highlights that East-West divide that you were speaking about.
Mm-hmm. Exactly. China, Russia, when you look at who is buying, the same countries that are members of BRICS. Poland was buying a lot of gold. Other countries, smaller countries. So there's a increased interest in accumulating reserves of gold. The concern that I think is probably not that well articulated is the fact about supply and demand. Supply of gold, as a supply of gold is shrinking, the above gold, the refined gold, the prices are going to probably skyrocket at some point. Also, current prices of gold are creating a kind of a balance, political balance. Because when you look at the amount of gold that some rogue countries and other ones have, should the price go to $10,000, as Nick was predicting at some point, there'll be a huge swing in terms of political and economic and military power. So I think that the gold probably is going to be steadily increasing unless there is some unexpected turn. For example, if should BRICS announce the currency, reserve currency backed by gold, and should many countries back their local currency in gold, that would the prices will surge dramatically. Also, I think in terms of availability of gold globally is going to be a problematic, and again that will push the prices. The scarcity of gold that would push the prices of gold up, or could dramatically. Now, worse, if there is any kind of a conflicts that are going to develop to something more serious than just a localized conflict. But when you look at what's happening, for example, in Guyana, Venezuela, has incredible deposits of oil, 1/3 of the world, 30% of the world oil. Venezuela suddenly revived its claim to certain territory that was in dispute for very, very long time with Guyana, which is mostly jungle. Probably very difficult for gold exploration. And personally, I don't think Venezuela really needs to have another source of gold. Oil, but gold. I do believe that the focus is on gold. The gold deposits in that territory of Guyana that's where everybody is going to be looking for. I think that's what is happening. Everybody's thinking of oil, the offshore oil. There is a huge deposit of oil all over the place in that region. But I think there could be the quest for gold, because again the future scarcity of gold, the kind of a renaissance of gold. The gold is going to be one of the most important, I think, factors that will shape not only economy and politics, but also what will shape is daily lives of people. I think average person does not realize how exposed they are, how vulnerable they are with the level of debt, with the everything that they believed was a normal way of not only surviving, but normal way of managing their own domestic economy. Now, of course, the interest rates are very important. The promised or the anticipated interest cuts are going to stimulate the economy, are going to have a positive impact on the households in North America, in particular, in US, in Canada. But at the same time, that will not relieve the debt that exists. That national debt is going to be at some point unmanageable. The other thing is, beyond that, is the fact that all those countries are going to be looking at a trading with each other. They have huge, for example, India, China. They have incredible possibility in terms of the consumption of different products. They may not really need European countries to do that. So again, they're being a huge disadvantage economically and of course politically as a spill. The other thing is wars, military conflicts. There is a huge amount of money, and debt is growing, being put towards a proxy wars, proxy conflicts, proxy political involvements. And the public is just getting to kind of with the internet get that kind of information, but it's not really visible. So unless you are looking for it, people don't see it. Everybody goes on with their life. Nobody's really aware of what is happening. The kind of a impact that it has on individuals when there is billions of dollars that are being put into some countries thousands of miles away. what kind of impact security, national security, those wars, proxy wars, and all those flashpoints don't necessarily provide a secure environment for us in North America. In Europe, yes, Europe has a proximity to a lot of those flashpoints, but it's a very interesting, component that a lot of people don't really get engaged or realize or understand. Now, many of those wars are based on historical and cultural uh, foundations that we do not understand, that the world doesn't understand. And on the surface, they seem to be something, that we should be involved in, but maybe, perhaps, some diplomatic solutions and some other solutions are probably more appropriate than armed conflicts. Though every time there's a war and there's a distraction, there's tons of money being made on rebuilding the countries. So, interestingly enough, I looked at the real estate prices in some of those countries, and I was in shock that territories that are totally disseminated practically have unbelievable high prices. Then before the conflicts, they didn't. So this is a very interesting thing happening. I remember when there were wars in the past 20, 30 years ago. Companies that were involved in the construction, in building, they had a fantastic prospects and they were booming. So there is two sides of war. There is this distraction, and there is an incredible profit. But again, going back to gold and going back to our fiat currency and our economy, the benefits of it are problematic.
Yeah, I think you did a great job of outlining some really big themes that people probably aren't paying as much attention to. And it's really great to hear. I learned a lot just listening to you right now. So I do, though, want to hone in on things that people might be paying attention to. And I know a lot of people are watching the Fed. You mentioned interest rates a little bit, what's going on there. So I want to ask, what do you see coming from the Fed this year? Just because I know that a lot of people have their eye on that.
The interest rates, you see, the interest rates, I do believe, are going to go down, definitely, for a variety of reasons. When you look at kind of average person at their mortgage, or people that have some investments, their personal cash flow diminished. That, in addition to the purchasing power of the fiat currency, is also diminishing. So that will help. That will help to stimulate housing, construction. There'll be more disposable income, so it will stimulate other parts. One way I always thought to address you can do two things actually. When you have a problem, economic or financial, you can cut expenses and squeeze, or you can basically free the available spending dollars, give it a chance to actually go back to economy and rebuild itself. So for individuals, for people, the big concern, as I was speaking in the U.S., our domestic, our neighbor, where it has a huge impact on our economy. We're actually, integrated pretty much together, and the European economy as well to some degree. Number one, our big issue is the U.S. election. U.S. election is a huge focus of everyone. The anticipation is to have a strong Republican leadership. That's what the anticipation out there is. At the same time, divisive narrative. So you have two things happening. There be some pluses, but also you will have the other opposition, and that kind of narrative is never healthy. Never, especially the time where there's another opposition, BRICS, and things are happening outside North America that will influence North America. The other thing is a crisis on the border. That's going to have a huge impact on every average person in U.S. for a variety of reasons that you can read about and you hear about that. Now, the other thing is I think the challenge to U.S. economy overall. There were some banks failures, as you know. That creates fear. Um, being a fear as a stimulus for anything is a wrong way to go. But the fears usually, generally, stimulate people towards something. And the funny thing that I should mention that gold as a last kind of a resort, last safety harbor in the times of crisis, many people go towards gold when it's already that fear factor is very, very significant. At the same time, when you look at gold, some people ask me actually, oh my goodness, oh, why I didn't buy gold when it was $1,000 an ounce? Should I buy now? Well, if you don't buy now, it's going to be much higher a year from now, 2 years from now. So it's kind of but people don't look at it. The general population, the sentiment is not there. Though I have to tell you that I just I was reading that in some, for example, in Georgia, Kentucky, Wisconsin, and Kansas, the lawmakers, they produce the pro metal or pro precious metal bill. They are removing, because they had taxes on precious metals. They are removing it. So there is obviously, politicians are moving that direction, even in a 4 states. That means that there is a sentiment that, oh my goodness, this is where we're going. We're moving towards that. So let's do something proactive. The other, I think is there are conflicts, a lot of conflicts also in the industrial sphere, in the technology. There are a lot of changes that I think. Sometimes I think that human evolution is much slower than the technological and other developments. So we're kind of stuck still in a real primitive stage when everything is moved so fast, and it's very difficult to grasp. So as all those things are changes, eventually, I think there'll be some sort of a bottleneck where it will be very difficult to decipher what is the appropriate policy, what is the appropriate avenue for prosperity, for security, for cooperation. But usually after the area of divisiveness is a kind of area of peace where everybody starts cooperating together and looking at things differently, holistically. There are many experts, but many experts are very narrow. So they have in that field of that sphere. But now, I think to understand what is going on, you have to look globally. You have to understand history, you have to understand culture, and you have to understand politics. Each side has its story. Each side is right for them, not for the others. So what is the mutual kind of a ground of that will work for everyone? Now, I do believe in precious metals. I do believe in gold, silver as well, not only because it's money and it has been always a money, but it is something that is for perpetuity. And as much as governments can regulate the interest rates and everything is by printing fiat currency is going to be, I think, marginalized in the future. In some countries, when you look, we have a poster here with different currencies that don't exist anymore. Has to have few million of their currency to buy bread, to buy milk. You can't even carry that. So it's different. It's interesting, but I think we are witnessing history. I think we are witnessing a great change. There are many events that occurred in the last week or last few weeks, few months that are game changer, and for the world as we see it today, economically, I do believe that to be safe, to be certain, and not as a wealth preservation only, but as a diversified kind of factor to what we have in investment. Gold is absolute necessity. Silver as well. Silver is less expensive. It's more attainable for a lot of people. But when you think about it, there are other gold products. For example, instead of buying the 1 ounce of gold for over 2,000, I'm talking US dollars, We have, for example, products where you can, call us. We have a exposure to gold in other, financial products that are inexpensive. Diversification is very good. It does not mean, I'm not a proponent of people dropping everything and just running, sell your house, buy gold, move to the cottage, get lots of cognac, and wait for for what will happen. I'm a proponent of growth and balance. I do believe that having a gold in your portfolio, even average person can have some gold or some silver in their investments, and that will hedge against any kind of risk. Future, it will fluctuate. So I think the one thing I cannot stress, people look and say, oh my goodness, gold went down by $1, by 30 cents, by $3, went up by 10. This is not how you look at it. From the consumer perspective, they have to look at the long term, long range. From the investment, that's another story. If you're hedging, against all those fluctuations, that's appropriate, of course.
Okay, I think really good overview again, and great advice for investors who are looking at this situation and might be a little bit overwhelmed about what's going on. I have one final small question for you before I let you go, and that is if you have a price outlook for gold in 2024 or perhaps beyond. I know we just talked about how maybe you don't need to pay close attention to the price, but just curious to get any thoughts on numbers there.
On an annual basis, I do believe that the price of gold will go to about if things go like conservatively right now, to about $2,300 in 2024. Some analysts think that in 2025 is going to be 3,500, but I wouldn't be surprised if it surge above that. Should the political conflicts spill into kind of involves the broader territories, more resources, more money, more countries being involved, that would put the pressure of gold to go up. Should for example, in Yemen, the Houthis and all these conflicts there, if they paralyze the transport of oil, if they paralyze if they affect anything to the greater degree, the gold price could go to some shocking numbers. The thing is, gold will always go up, and it will never disappear. But now is the time of what time frame we are talking about. So this is the kind of a question, but definitely I think I'm looking towards by the end of 24 to be around $2,300. That's what I'm sort of seeing right now. I'm hoping for more. From our company perspective, we have plans. Nick thought of $10,000 an ounce. I'm still there. I'm waiting. I don't know when that will happen. But the other thing is, I think that the supply of gold. This is a big concern as well. That as much as the price will go up, the supply of gold will shrink. The exploration for gold will increase, but to have actually the production and the sufficient output, it takes time. So in the meantime, that's going to be difficult. I think in closing, what I would say that every person should really take a look at how they can acquire some of the gold in their portfolio is a big word for average person, but in their possession. And again, I would urge people to come to our company. We have incredible products, and we are regulated. We have mutual funds. We have a physical gold, and we have a 20-year reputation. And I think the most important is the fact that we understand how important it is on the personal level, even institutional level. And I should mention that actually very interesting. A lot of pension funds are running into problems. I've seen some pension plans that are really eating away at the principal amounts. I had people showing me what's happening to the pension plans. Pension plans typically don't have a physical bullion as a stabilizer. They have some other products, gold related or the bullion related product, but they don't have gold. Having a physical gold on the institutional level definitely would prevent from pension plans even collapsing or for the pensioners having their pensions reduced dramatically. And we'll be focusing on that as well to work with the institutions to open their doors to that kind of a product. As you know, the sentiment for gold is right now very good, and I think the understanding is much better in the mainstream media. You can hear or read about it, and that's very important. I think for average person to learn and to know and to understand and to know what they're investing in, what they're buying. And of course they should ask their professional financial advisors to see if they should invest in different gold products. However, it is still a I think great opportunity right now at the price of around $2,000 an ounce, and the silver is something to watch for. It's coming up.
Okay, I think that's a great place to wrap it up for now, but would love to come back in the future, talk more about gold and maybe about silver next time. Thank you so much for going over all of your thoughts. I think I have a really good idea of your thinking about gold and geopolitics. This is really good.
Thank you.
Of course, and once again, I'm Charlotte McLeod with investingnews.com, and this is Yvonne Blaszczyk with BMG Group. Thank you for watching. If you like this video, make sure you subscribe to our channel. We'd also love to hear your thoughts, so leave us a comment below. We'll see you next time.